Hello and welcome back to another video. My name is Justin and today we have the broader market having a really nice snapback. Here we're looking at the Russell 2000, which is currently up by 2.6% on the day. 3% on the day. ARK is up by 5%. Every major ETF is green. Every trillion-dollar company is green. Crypto is up. SPY is up. QQQ is up. Everything is up that we care about. And it's all on the back of Jerome Powell talking today. So instead of actually looking at what he said, what I want to look at is actually how the other news agencies are actually talking about what he said, meaning how are they interpreting what he said in terms of putting a news story out there. And when I look here, oh boy, is this confusing. Right, Fed's Powell says soft-ish landing for U.S. economy is plausible. Powell, Fed to keep hiking rates until it controls inflation. Powell, some pain may be required to slow inflation. Powell says the Fed will not hesitate to keep raising rates until inflation comes down. Powell says Fed has to resolve to bring U.S. inflation down. So keeping all of that in mind, I don't really see a clear pattern here. I don't know that we really heard anything that was really earth-shattering one way or the other. So instead, what I want to do is I want to look back to what we talked about yesterday in terms of are the key indicators above or below the key areas. And as we look here, as of right now, S&P is currently above 400 on a closing basis. Check. QQQ above 300. Check. BTC above 30K. Check. ETH above 2K. Check. So for me, this basically signals that risk assets are ready to go up if that is our dominant trend we're going to be doing. So right, everything here is above the key levels. So let's just go through that really fast. We'll look at the heat map and aiming to keep today's video a little bit shorter because nothing has really changed. All right. Let's go. So looking here at the heat map, it's green, right? We like seeing green. Yes, we do. And what's notable here is that we are seeing breadth. We are seeing depth. Walmart is definitely a red flag for me. Definitely shows me that if the cheapest store is now having issues passing on cost to consumers, what does that mean? For me, it means they can't afford it. But who cares about that today, Justin? Today, the market is green. Let's talk about the stocks that are up. Apple up, Microsoft up, Google up, Amazon up, Tesla up. And what's notable is that the trillion-dollar companies that have been leading the decline are actually leading the snapback here, including NVDA, including Tesla. So for me, that's very notable because as we also look down to the ETFs, we're noticing that ARK is up the most and IWM is up the second most. So that's exactly what I would want to see. Second thing I want to talk about is just we also have, I think I forgot to mention this before, so let's actually shut this down, right? We can note that it is just a risk-on day. There's two things I want to show here which are giving me a little bit of concern, and I want to look at SPY for about a minute. I'll circle back, and then I want to talk about a few more things. So this is the hourly chart. What I mentioned on Slack today is if you were looking at this, would you even know that Jerome spoke today? I would say no. So based on all those headlines that we read, nothing really catches my attention, which means let's defer to the price action. And what do we have here? We have a nonstop green day. We have a soft open and a strong close. And we know that bear markets are defined by strong opens and weak closes. What did we do today? Yeah, I know. What's going on here? Get rid of all this crap. What's going on here? Oops, sorry. I have no idea what's going on here. There we go. Sorry about that. Anyways, going forward, bear markets are defined by strong opens and weak closes. What do we note here? Well, gap and go, flat, and then we got a gap up, back test, and push off. That's bullish. For me, that is classic bullish. However, do we have the price action? Sorry, the volume to confirm the price action? No. We got a beautiful pattern here, right? Beautiful inverse head and shoulders. We have a very clear area here to set our stop losses in as we get into bear market territory. We're butting up against resistance here, and we already know 411, 412 is a very important barrier. So I just want to point out here that we're getting to the point where we need to see some volume, right? The closes and opens for the last couple of days have been really soft, and this is a lack of sellers rally, not a buyers rally, in my opinion. That's why it's a bear market bounce. And this pattern right here was very similar to the one we were looking at here on the weekly, where volume starts to flatten out, it gets really boring, and then boom, there's the flush in volume. So as we're looking here at the weekly chart, what it's telling me is that we've already taken out the high from last week. We're closing at the high. What does that mean? Pressure's building up to the upside. And we're now back inside our pennant. That is classic bullishness. If we hold it for the next 3 days, that's great. Now the question is, what's going to happen on that hourly chart? And finally, when we're looking here at our monthly, we already know that the level Justin wants to see for us to actually be bullish going into Friday is going to be 411412. We're really close to that area, but we're not there yet. So now quickly touching in on a couple of ETFs, and then we're going to talk about VIX because that expires tomorrow, and we're going to keep in mind that we have an options expiry on Friday. And I'm just going to go through and provide a little bit of education in terms of what we normally see going into OPEX and what we see today. So the Russell, right, the ETF that has been the stinkiest one for quite some time, we can note that exactly where we would expect to find buyers we did. That's right here on the green line. From the low last week to where we are now, that has now led to a roughly 7.5% rally. Pretty nice. This is exactly what we want to see. We have to now test these relative lows to actually confirm that we're not just taking out the relative high, but actually starting to reverse. And we're still going down, by the way. We got to get above roughly 195.200 to do that. So what happens here at 188, very important. When we look over here to ARK now, the other major ETF I was personally tracking, again, up 5% today. Not bad. It's still red on the week. Had a down day yesterday, and it stopped going down based on this downtrend. And that same low that we're looking at is going to correspond right here with the pink line at 52.02. So if we can't get above 52, this means that it's just a dead cat bounce. It's a capitulation bounce. We already know that. Next thing I just want to look at here is going to be whether or not S&P is outpacing QQQ. We're going to look here at a weekly chart, and we can note that S&P is up by 1.6%. We can also note that QQQ is up by 1.4%. And we're starting to see the S&P pull ahead. It is here at 408, and QQQ is here at 306. So this could be related to OPEX, which I'm going to flip to here in a moment. But the second thing I would note is that our Algo was incredibly happy today. One of the biggest days in terms of sheer number of alerts that are high time frame or the market's trying to go back up. I can tell you, though, that the leaders of the last rally are not necessarily going to be the leaders of the next rally. And we saw Warren Buffett making some strategic buys, including Citigroup, Paramount, and I just want to be mindful of that. So if we're looking for leadership in the same spots we were before, I'm not sure we're going to get the best result. All right, now let's get over to the next part here, right? Final thing, just to wrap up on Jerome. Here's a quote of the day. I'm thinking about maybe doing something like this when it's relevant. Again, drop me a comment as you're smashing that thumbs up if this is interesting to you. When money is expensive, everything else is cheap. That's where we're going to. Where are we right now? We were in money is cheap and everything gets expensive. Again, by expensive, we mean up. That's what people like. They like when things point up. Ethereum up, Bitcoin up, S&P up, NASDAQ up, Apple up, Tesla up. Well, remember, if we're not fighting the Fed, what Jerome basically said is that money is about to get expensive. So what should happen? Well, everything should get cheap. So we have to keep that in mind as we're remembering that Friday is monthly OPEX. And if we don't notice anything on the tape that is moving the market in a way we would expect, does this maybe have to do with the normal market mechanics going into a Friday OPEX, where their motivation does not really revolve around headlines, it revolves around who wants to make money. Last thing I'll just point out here is that we have to also remember that whatever happens into this week, we have to battle with June 1st when we're going to start to see balance sheet runoff or quantitative tightening. And we already noticed that there is a divergence happening here by looking at the yellow line, which is the S&P 500, versus the white line, which is the Fed balance sheet. And we have not even started to reduce it. When it starts to reduce, right here, right, there's the drop. And right here, we're not even reducing it yet. That starts on June 1st. That is why that monthly chart we just looked at is so important. If we cannot make it back above 411, 412 going into June, what will it be? It will be resistance. It's not going to be support. So we have to be very mindful of that. All right, Justin, take us home. Let's wrap this up. Here is the, well, actually I want to look at this one first here. So this is the VIX expiry for tomorrow, May 18th. It's a monthly chain. I'm looking here at, okay, well, if we know that 405, 410, or maybe even 415 are maximum pain for SPY and QQQ, what about VIX? This expires tomorrow. So we got a turnaround Tuesday. Are we going to get a Wednesday or are we going to get a flat day? I don't know. But as I look here, I think we're going to settle at about 25 on VIX. Why? This looks like max pain. 95,000 calls, 170,000 puts. It would make sense that we're going to be a little bit above 25, but not by too much. And this is kind of where they want to pin it. So now let's look at the VIX and see where it's settling here. 26.11. Low of the day, 25.51. Oh, interesting. So I think that we have to see what's going to happen next week. Post-OPEX, I'm talking probably Wednesday, the first couple of days, maybe the first two. We can usually see that opposite move before the true move really happens. And now, as we look forward to the S&P 500, noticing that, again, this is the volume for tomorrow. This is for the 18th of May, also the same day that we got VIX expiring. And then we got the one for Friday, which is the big one. So looking here, I can note that I could see us moving to 410, absolutely. 410 plus the premium, that's going to be 411.6. And that is almost exactly what we need to get back above that monthly low. They're even buying up to 415. I think that's a stretch. So what I'll be looking for specifically is whether or not this 195 in volume actually materially increases the open interest, because right now we got a 405, 410 call spread. So if we can't get more calls that are actually flipping to overnight, meaning they're cashing in at the close and closing at the high of the day on SPY, that is a big warning. On the flip side, we got 406 to 404, and it's roughly 100,000 at every strike. So that's notable. In terms of continuation going into Friday, we can note here that 410, yeah, well, in terms of open interest, there's twice as many puts to burn as there are calls, so maybe 400 is not max pain. Maybe it's 410. Maybe it's even 415. Honestly, I don't know. I think we're going to close right around a round number. If they want to burn the puts, they need to get us back above 400, and that's it. The most puts are sitting at 400. So now let's take this home. All right, let's go back to SPY and see if we have any earth-shattering news here. Well, again, low volume rally, bear market bounce to start, reversal attempt, and as long as we're above last week's high of 406.41, we are above the 400.67 gap. We're back above the 403.38 low from the gap here, and this looks pretty constructive. Taking out this next low here at 410.64 is the one we're looking at in the monthly, and all I would point out is that the pattern, which is going to feed through to the weekly chart, is already happening here on the daily. We now have a clear trend change attempt. We're still below the 50, which is at about 431. And we can note here that leading down, we had lower highs and lower lows. Then we stage our Morningstar Doji, which is just a reversal candle. And now what do we have? Every single day, higher low, higher high, bullish candle into the close, no gaps in the chart. Volume is dropping off though. So with that said, I wish you guys all the best of luck into the close. And if you want to know more, I will have a video up here in a moment, which walks you deeper into my weekend analysis to be best prepared for the week. Thank you for watching, and I look forward to seeing you tomorrow.